Time to see what's on the radar. We're back with Peter Hodson, Chief Investment Officer at I2I Capital Management, and we're going to talk about the Japanese yen and why it's on your radar. So the first question would be, why is it on your radar?
So first off, I'm not an expert in the Japanese yen, but it is something that I think investors have to watch very, very carefully. So here's the basic scenario. So for multiple years, like 10, 12, 15, 20 years, you've been able to borrow very, very cheaply in Japan. You've been able to borrow yen at effectively 0%. You know, it bounces around 0 to 0.25, 0.5, but effectively versus other competing ways to borrow money.
That's a good deal.
It was a fabulous deal. So everyone's borrowing yen and then investing it elsewhere. And you can just invest it into the US, you know, a year ago at 4%. You can buy stocks, you can do whatever, and you can arbitrage that differential where you pay 0.2% and you make 4, 5, 6%, 10% if you're lucky. And so
we call that found money.
Yeah, exactly. So that's the carry trade. And it actually is, you know, until something changes, it is free money because it's an arbitrage on investment returns over different regions. So every once in a while, though, there's a problem, and there's either a crisis in Japan or interest rates go up in Japan, and suddenly your free money from 0% goes to 3%, and that carry trade is completely messed up. And you get this unwinding of positions around the globe because there's no longer free money that you're borrowing. And I'm really quite surprised that we haven't really seen much of a reaction to this because Japanese rates have spiked, and the yen is bouncing around like a yo-yo right now. And the Japanese government has a really tough decision whether they're going to support the yen or raising interest rates or let the yen sort of suffer. And then you've got the corresponding economic impacts of that, lower cost of living, higher inflation. And, you know, neither scenario is good. You can't spike up interest rates because that has its own problem, and you can't let the yen just drift. And
what are they? It sounds like they're looking at holding the line for now, aren't they?
For now, yes, but we're not too sure how long that they can last in terms of that. But last year, like even in mid 2024, there was a bump up in the yen and the interest rates moved, and there was a big shift in North American markets. And I'm kind of surprised that no one's really caring about that right now. But maybe it's because it's going to be par for the course for now. But it's almost like a canary in the coal mine. Is if you get this massive unwinding of positions, it's going to cause a lot of volatility. Now, to be clear, it doesn't really impact the fundamentals of these companies, but it just causes a lot of selling pressure in a short period of time. So you may see some of your stocks that are billion-dollar, trillion-dollar companies take 5%, 10% hits, and you go like, what's going on? There's no news, earnings are good, blah, blah, blah. But it could be just a simple unwinding where when you have borrowed money and things change, investors tend to do very, very rapid changes because that borrowed money, of course, can kill you if you're on the wrong side.
If you're caught with it. Do we know how much is there much in Canada?
I don't believe so, but I don't have the numbers there. And the companies generally don't report how much exposure they have to the yen on a daily basis or anything like that. But absolutely, I mean, it is a global phenomenon for sure, and it's trillions and trillions of dollars at stake, and that has been borrowed and has been reinvested elsewhere. So I don't think it's something to be discounted. Because if things get ugly and maybe rates spike up in Japan very quicker than expected, you absolutely will get a sell-off as people unwind these positions.
And then what happens for Japan with that money going back in now?
Well, the yen will get supported, and they'll try and reboost their economy once again. I mean, it's been a 30-year story trying to get this economy, doing something. I was actually in Japan a couple of weeks ago, and it's the cities are fine, but the countrysides are just dead. You can buy a house for $20,000.
They're giving houses
absolutely,
away, right?
But there's nobody around. Like I was on a bike tour and there's just like nobody. And then you go to the cities and it's Crazyville. But they really have some issues, and part of its population. They've hit the tipping point where their birth rate is
they have a negative birth rate. Right
they don't want to bring in a lot of immigration. And you've got this situation where I don't know how they solve that particular problem. I mean, it's a great country, but they really need to fix their economic situation for sure.
And could we see that bleeding over this way, where they're struggling? And I mean, we've had a population boom over the last while, but now we've slowed down.
It's possible, but it's a 10, 15, 20-year process.
Off topic there, but
absolutely, countries have to plan for the future, and countries like South Korea and other countries where if the young people are not having children, there's no one supporting the future population. And of course, as we age, as we live longer, it becomes more of an issue. So a lot of countries have to sort of think about, okay, what happens in the next 100 years, as opposed to they're so focused on, how am I going to get reelected in the next year? It's really sort of a systematic problem here.
Again, I'm going to bounce back just when we were talking about the yen going elsewhere. Did we ever see that with the dollar, the Canadian dollar? Was there ever that appeal to it or no?
No, the reason is Canadian dollar's not
I mean, we got down to a point where it was 2%, I think was a...
Yeah, but we're not liquid enough to sort of support a global carry trade where the Canadian currency is just a small piece of the pie in the terms of the global currency market. And if we had the volume of money that was borrowing Canadian dollars and investing elsewhere, I mean, they just wouldn't do it because that unwind would be so ugly because the liquidity is not there in the currency.
Okay, we're going to leave it on that note there. But Peter, thanks as always.